with that, it's a good time to welcome in our market guest on the show today. And the guest is right here with us in the studios, which is always great. Rahul Arora of Nirmal Bang Institutional Equities. Rahul, great to have you in the studios. So what is happening to this market? Purely, I'm talking index, and I know you probably will say, don't look at the index, look elsewhere. But just on the index, the narrative that we're getting from so many global guests is, you know, money flows should really come into India because that money is moving away from China. It's going to Japan. More of it should come to India. Why is the index struggling then?
So first of morning, and thank you for having me. So I think there's a bit of a dichotomy at play here, Surbi. I think if you look at the Indian macros, they're phenomenally in good shape. I think compared to the narrative that was there in October, November around Diwali, the world should have already entered a recession by now, and India's growth rate should have been reflecting that. The biggest positive for India right now is crude seems to have reasonably settled into that $70 to $80 range. I think that's the biggest headline for India, which means because our inflation component is not demand-led and more supply-led, this will actually hold well for us. The corollary to that is the commentary that's come from the US Fed over the last couple of days, where they said that they may be hinting at a couple more hikes, and even after that they said that there may not be a cut for the next couple of years. So that may actually tie the RBI's hands. So I think you've got a bit of a tug of war here. In that backdrop, I think the fact that you've given a 7% GDP growth, I think most people are calling for a 6% for this fiscal year. There could be positive surprises, I think, more than negative, I think, the way things are going. But I think the earnings season, by and large, was also okay. So there's no reason, as such, on the headline to throw in the towel. As you rightly said, you know, more monies are moving away. I think a couple of global economies like Germany and New Zealand have already slipped into a recession. China's data points are extremely weak this week, whatever has come out. So in that backdrop, obviously, India, because of its macros, and like I said, the biggest advantage for us is crude where it is. The other thing, Surbi, is that the market has spent such a long time in this 16,700 to 18,700 range. My sense is if it breaks out on the way up, it's not going to be a small breakout. Then you may just land up seeing 20,000 on the Nifty straight away because it's another 10%. Because it's been very long. I think it's been about 2.5 years that the market has been in a broad 2,000 point range. So either side that it was going to break out, and now it looks like it's probably going to happen on the way up, it may not just stop at 18,800 or 19,000. It may just break out on the way up, and you may be positively surprised. So I'm not entirely shocked by where we are. I'm shocked by the fact that we haven't hit a recession. But let's say, you know, it's a Friday, all's well. And I hope the momentum continues.
You know, Rahul, the headline index, we're waiting for those all-time highs. It's a matter of time, I think, before we get out there. But the real party, since it's a Friday mode, has been in the mid-cap and the small-cap indices. Do you think that's getting a little bit extensive out there? Or do you think there's still plenty of pockets to find value? Because the headline index, I think, as commentators for the last few weeks, we're saying we are just so many points away from there. But stocks are up 10, 20, 25% in this period itself.
No, I think there is definitely a lot of flows at an aggregate level that are still there in the market. I mean, the mutual fund industry size is almost 40,000 crores, right? And even if your rate of SIPs is coming down, those flows are still coming in. So you are going to look at chasing stocks in the broader market. I mean, look at the subscriptions of the stock that's going to list today, right? I think on one of the metrics, it was 165 times oversubscribed. So I think the market wants ideas. I think, unfortunately, what's happening, Nigel, is if you look at the top 5 mutual funds in India, they're probably about 40% of the AUM. Right. Unfortunately, what's happening is that a lot of these guys who are getting the inflows are buying their favorite stocks. So what's happening as a sell-side analyst, you can do only 2 things. Either you extend your time horizon on which you're valuing the stock. So you take it to FY24, 25 midpoint or 25 or beyond, or then you do a DCF and you get it back. Or then you extend the multiples. You can't stretch the earnings. Earnings utne hi aayenge. It's like, you know, that's what it is. So I think there is a case for mid-caps to do well. I think pockets of the market, you know, sectors like pharma, cement, etc., are presenting value, even at this point. And I think it's very possible that the mid-caps outperform the large caps. Yeah, so I think if the Nifty heads, you know, 10% higher from here, the mid-caps are going to give you 25, 30%. So that's probably, that pocket of the market is probably where you want to be.
What about the underperformers of the pockets which are doing extremely well? Case in point, the FMCG index up 18% this year among the top performing indices. HUL has been an underperformer there. If you look at the QSR space, which you track closely, Jubilant Foodworks has been an underperformer there. If you look at the other consumption stocks, United Spirits has been an underperformer as compared to other stocks in the sector over the last few months or so. So are you looking to back these underperformers in otherwise good sectors?
So I think the way to look at it, Manglam, is we don't have to go blanket overweight on the sector. I think look at the pockets that are doing better than the others, right? So look at a Britannia. There is a case in point for why it's hitting new 52-week highs, right? There's a reason Asian Paints didn't fall for the longest period of time. And, it's almost like even though, if it's fallen a little bit from now, from the highs, people say, kya fark padta hai? It's gone up so much that your starting point of the fall is so high. But I think you just have to track the performers. I think, let's take a look at Tata Consumer, for example, right? It was a single-digit ROE, ROC company for the longest time. If that heads up to 15, 16%, you are going to get a valuation re-rating. It will probably not be as much as a lever, etc. But I think, Manglam, at the margin, what's changed is that people are expecting rural to pick up. I think most people are expecting that part to sort of recover. The RBI governor also spoke of a good Rabi crop. He spoke of rural recovery at the margin. I think that will aid. So I'll tell you one interesting fact, Manglam, because I actually attended the analyst meets of Hero MotoCorp and Ashok Leyland and some of these others in the last 1 week. I don't know how much of a top-line story India is going to be in terms of volume growth, because everyone seems to be talking about premiumization.
Right.
It's almost like either India is going to skip one entire level of consumption,
and go into
or then the entry consumer is going to sort of, is now getting so much of his savings coming into consumption that he is okay to go out there and consume in multiples of what he or she was earlier. That being said, I think at this point in time, maybe a Britannia is something that I would still back, maybe a Tata Consumer. Hindustan Diva. That's probably where my large cap. And I think the dark horse from here, Manglam, would be ITC.
Okay.
I think because I'll tell you why. If you look at most sell-side reports, right, from the largest maybe sell-side broker in India to the smallest, the exit multiple on ITC won't be more than 30, 31.
Right.
Right. That's still a 30% discount to what anything is valued in FMCG. Now the return ratios have moved into the 40s. Right. So I think if they're going to sort of move up their non-tobacco FMCG EBITDA margins to say 13, 14, 15%, I don't see why that valuation gap can't compress. I think the point is your starting point was so darn depressed that you're like, acha, stock double ho gaya, to yahan se kya?
Can't call it a dark horse anymore, right? It's a nice fair horse now. It's no longer a quintessential dark horse.
Yeah,
right?
no, I'm saying because people would optically, people would say it's doubled. So now what from here? But I'm saying that there is still valuation comfort. And I think on the consumer discretionary side, Manglam, I still think Westlife is good for 2000. I've said that at the peak of the pandemic. I used to be asked, what's your 10-bagger idea? I used to go with Westlife. I think we're already from 250 to 850. I think it's probably going to outperform anything in the QSR space. Just keep your time horizons realistic. The stock's gone up about 3.5, 4x in a fairly quick period of time. But I think that's probably the horse I'll continue to back.
All right. Rahul, the call that you all got right was on IT. And I think Girish and team, you all have been bang on out there. Very, very cautious on IT. Still cautious out there? Is there any pocket that you like from the IT space? As you said, shouldn't look at sectors, but maybe individual stocks. So IT is still cautious, but are there individual themes you like?
So I think the interesting part is that recession keeps getting pushed back. So you keep saying it's coming, it's coming, it's coming, it's coming. So I think that's probably factored into Girish's number. And I think this morning you guys would have seen the news on Transamerica and TCS, right? Even though bulk of that contract is about 75-80% done, the fact that they had to rescind on it is telling you something. So I think we'd probably still be underweight on that sector. Not as much as we were, say, a year or year and a half back. I think if the benchmark index is about 12-13% weight on IT, we'd probably say 200-300 basis points at best right now. Because I think even if you look at our downsides ex persistent, where we have a 40% downside, on most of the other stocks, our downsides are between 10 and 15%. Right. So it's not like it's sort of throwing in the towel right now. Right. But that being said, even though we are a sell on the sector, it's not so much on the downside as it is on a relative outperformance. So we still don't think you'll get an absolute alpha by investing in these stocks. So if you're somebody who looks at outperformance, holding IT for the next 6 to 8 months could still hold you some pain. So I think maybe the time to enter will be a quarter or two down the line.
Okay.
Maybe around Diwali when you have some better visibility on how the US economy is shaping up. But for now, it definitely remains an underweight.
Okay, so remains an underweight. Rahul, I think almost every buy-side person that we speak to wants to play the manufacturing theme, right? We were speaking to Pankaj Tibrewal yesterday of Kotak, and it's a question of how you want to play it, right? So he was saying that look at home improvement, look at auto ancillaries, look at the bearing guys, etc. What's your sense on this whole manufacturing, capital goods? and how one can look at it. It's a huge space, right?
So
Need to be careful.
I can tell you, speaking to Pankaj Bhai as a client over the last decade, if there's one person you wanted to get to speak on that theme, it is Pankaj Bhai.
It has always been him.
It is always him, and I think...
but the others have now kind of, caught on to his song.
Yeah, and I think he's got a lot of his calls right as well. So credit to him, the Dixons and the chemicals and all of that. But I think where India is, and I think if you look at things globally, right, from a manufacturing perspective, I think while we use the word Atmanirbhar in India, I think a lot of countries globally are looking inwards in terms of boosting their own, because they are wanting to supply jobs to their own constituencies, right? The US itself is going into an election next year. So I think to that extent, this theme will continue. I think the PLIs have all been in place. Let's go back to the first answer, right? Today's company that's going to list, it's such a small company, right? But look at the subscription numbers, right? And if you have companies like these, right, the company that lists today is, I think, if I'm not mistaken, a 42% return on equity and a 32% capital employed company, right? And I won't be surprised that if this stock gives you 50% in the next 1 month. So it goes back to the point that there's a dearth of mid-cap ideas. I think chemicals, which has underperformed for so long, one threat was that China will open up, there'll be dumping in the market, and, there'll be some issues on the pricing part of that. But I think if you look at the last 2 years for chemicals, they've not really done much. The first 18 months of the pandemic was huge for these guys. They got re-rated multiple times. So that's probably a way you can play it. I saw, an advert on Twitter. I think you're doing an interview with the Apar management.
Industries,
I think that's a great stock, on the manufacturing side. Solar industry is something that we've liked for a while. So I think these are very good return ratio companies, almost FMCG-like. A lot of these guys have return ratios and margins which are a la FMCG. So they may actually sustain their valuations.
But the sense I get listening to you is that you're more inclined to play manufacturing via tier 2/mid-cap than the L&T, ABB and Siemens of the world. Is that right?
That is purely a regulatory thing because we don't track those stocks. So I'm going to, but I'll tell you, this is where probably where retail will also be interested. I think your viewers may actually be interested more in some of these names, like a Power Mech project, right? I mean, if you look at Power Mech projects, they don't even talk about that 8 or 9,000 crore order that they've got from Adani when they give their projections. Imagine when that starts getting executed. So there are enough and more ideas in the mid and small cap space as well, in capital goods, manufacturing. And when you say that, extend it to autos. Why not? Right? Because it's an auto PLI. Pharmaceuticals is also manufacturing. So I think sometimes we get too caught up in what what manufacturing is, but the pharma sector has underperformed. And I think there's a lot of money to be made in names like Torrent, Cipla, Sun, JV Chemicals. I think these are presenting a lot of value even at this price.
So Torrent, Cipla, Sun, JV Chem. You alluded to cement briefly. What are the names that you're backing there?
So I think, Manglam, the point here is cost, right? I think, I think one of the key things to understand is people say this is a pre-election year. The volumes 10-12% grow kar jayenge. The point is that these announcements will come now. They will be executed post-election. What will be executed in the pre-election year is still projects that were awarded in the last 12 to 18 to 24 months. But we are reasonably sanguine when we talk to cement companies that broadly volume growth can be in the 8 to 12% range, average 10%. Now, I spoke about crude being in a very comfortable zone. I think if you look at petcoke, coking coal, most cement companies' high-cost inventory will probably be out of the system by the end of the first quarter. So I think the back end of the 9 months of this fiscal will see a huge delta on EBITDA per metric ton. You may actually find some cement companies going to 11, 12, 1300 as well. So in that, given that framework, I think from the large caps, you'll probably look at Ultratech. From the mid caps, you'll probably look at something like a Dalmia. But I think if you're going down the market cap chain, you could probably look at JK. Or Birla Corp. I think these would probably be some of the names that stand out. It all depends on how you look at Ambuja, if you're looking at it as a consolidated entity or standalone. But that could, obviously for other reasons, it's not been in flavor. But I think that could land up being another stock from the large cap space where we should keep an eye on.
All right, Rahul, we have an interview later today with the new IPO. So I'm going to send you a copy of that interview.
Please do. I'm very interested to hear it.
And Apar Industries, y'all have been one of the few brokerages, have coverage out there. It's been a big outperformer as well. So, hopefully you and your team will track that interview. It plays on Monday. And hopefully we can get Power Mech because that's another one that's been a big outperformer. And I think y'all were one of the first sell-side guys to go ahead and generate and initiate coverage on that one. So good on you guys.
No, I already have an idea for who moved the market. I think I'll be calling you, Rahul.
No, you never know how these things play out, Survi. I think if you remember Dixon, I think the IPO price was somewhere around 3,500 and it became, a 7, 8, 9 bagger before the stock split started. So, there's no reason to suggest that today's issue can't do the same because I think it's if I'm not mistaken, the gross margins are probably the highest. It's a 20% plus gross EBITDA margin business that's listing today.
Take your point, Sirma, Canes, a lot of these stocks.
7-8 baggers. I'm not sure whether you track Varun Beverages or not.
That I don't, but I can tell you that when we talk to our institutional clients, the view is split down the centers. It's either you love it or you don't like it, but it's kind of split down the center. But I think if you want to get into mid-cap FMCG and rural picks up, I think Dabur may not be a bad play. Is my sense.
All right.
The dark horse.
Sorry?
The actual dark horse.
I mean, you really
Let's call it the Dabur horse for now.
You can't really call everything a dark horse, but I'm saying that if it picks up, if you want to head into mid-cap consumer, that may not necessarily be a bad idea.
Okay, thanks, Rahul, for coming down and sharing your thoughts on the markets as well as individual stocks. Wishing you a good Friday
Thank you so
ahead
much.
as well.
You too.
Well,